Smooth. Okay. Hello, everyone. Welcome back to another episode of Market Outlook series with me, Kavita Agrawal, the founder of EXP Invest. Now, today, the month and the week both come to an end. So, let's do a joint analysis for what the entire month of August has been like. And at the same time, let's also see what's been the activity of the week. So as usual, we'll take a look at the 3 minute time frame of Nifty and move our way up. Then we will also take a look at the sectoral charts and see where the momentum seems to be headed. So I feel like this week's market was very well distributed across sectors. All right, let's see. There seems to be some switching of my audio device. I'm not sure why. So let's switch that back. There we go. All right. So, like I was saying, we'll begin with the 3 minute time frame of Nifty, work our way up, and then we'll also look at the sectoral indices. Um, Perfect. Let's share my screen. All right. Just give me a second here. Marcus, fine. All right. Fine. So this is the 3 minute time frame of Nifty, and from the last week where we did our market outlook, we were over here, right? No, sorry, we had come around here. So we were experiencing resistance around 24,800, right? And I had told you that there is this resistance now. Not sure. We were dicey. We didn't know whether the market was going to be able to overcome the resistance of 24,800 to 24,900, or it was going to start tracing. There was a small negative divergence, but the negative divergence was very well dissipated by the market, and the upward trajectory actually continued quite strongly. And we see that this week we've registered another about 400, 500 point rally in the broad market, which is great. Now, one thing to notice about this broad rally that has unfolded is over here, majority of the rally has taken place in these two moves. The rest of the time, the market has been pretty sideways, right? That I am not very comfortable with. Also, if you look at the 3 minute time frame, if I can just clear out this drawing for you a little bit more, you will see certain signs of a bit of a range shift is visible in the form that earlier the index, so as long as the index was respecting the resistance and only in the leg after the index, we can see the 3 minute time frames RSI reach out to the level of around 80s. But since then, a negative divergence has definitely developed, and now, even though the price of Nifty is at a lifetime high of 25,267, um, the RSI here has kind of been shy of going back to scaling the same heights, right? To me, that is a bit of an indication of change in underlying momentum. On the downside, also of the RSI, if you see what was earlier returning back from the level of 40s is now very well breaching the level of 40s and started to test the level of 30s on the 3 minute time frame. What does this mean? This basically indicates that there might be some underlying shifts in momentum and it may not be as strong as it was. Let's take a look at the 15-minute time frame now. Now, on this 15-minute time frame, a very well defined negative divergence has emerged on the RSI, which again reinforces the view which the 3 minute time frame has helped us develop. What this is telling us that find this resistance. So let's remove this resistance from the chart as it's no longer relevant. Just want to remove the text, right? Now what I'm seeing is that fine. On the daily time frame, this rectangle here, this yellow rectangle that you're seeing, this indicates that the daily time frames real high has been breached. Fine, we'll assess this when we go to the daily time frame. As for the 15-minute time frame, we are seeing a negative divergence here. Last time, when the price established a real high on the daily time frame, similar negative divergence appeared on the 15-minute time frame, and the price corrected to the next support level. That is just something to note, not drawing any inferences at this point. And then a positive divergence emerged, and we saw a massive rally. Now, again, a very similar negative divergence is again emerging on the charts, right? 15-minute time frame done. Let's move on to the 75-minute time frame. What am I seeing here? So I'm going to remove this booster short marking because again no longer relevant. And here on the 75-minute time frame, momentum continues to look pretty strong. There is not much indication of a negative divergence or anything per se. So the 75-minute time frame is actually looking a lot better than the 15 and the 3-minute time frame. And here it shows me 25,500. 20 is most likely, 25 is most likely the next plausible resistance level. The momentum is still quite strong here. The last real high I've marked at this peak, I would say it has definitely created another peak over here coinciding with the previous peak. Now, whether this one also gains the marking of a peak will depend on whether it crosses and creates kind of a pointer on the RSI or not. Right now, it's not doing that, so I'm not going to mark it. Right, so I'm going to keep this as the real high marking. So this becomes the very immediate. So 25,000 becomes the immediate support. 75-minute time frame is telling us that the underlying momentum is very strong. Great. Coming to the daily time frame. So like I said, this was the previous real high. Let's extend this a little bit. This was the previous real high, right? Daily time frame is also suggesting strong momentum. And this momentum seems like it can continue to at least 25,500. We are looking at a very strong unfolding momentum in the market. Of course, the 25,000 level continues to remain a pretty good support. I would even say 24,800 basis the daily time frame. But as long as those levels remain intact, 24,800 to 900 remain intact, we are in a very strong bull run for the 75 daily time frame analysis. Weekly time frame, taking a quick look again, underlying momentum seems strong. 5 week time frame, if you see, um, again, the long lower wick over here again suggests that the underlying momentum is strong and the price continues to push through despite of the very temporary within the month volatility that we experienced here in the form of this movement between 1st August to 5th or 6th August, right? Since then, the move that we've seen has been pretty strong with very good momentum. So that's the outlook. Now, let's move on to our indices. So I'm going to open my all indices watch list and we'll move on one by one. All right. So Bank Nifty, the momentum has been pretty slowed as we had discussed. We've come up to test this resistance level that has been marked around 51,400. It'll be very interesting to see what Bank Nifty does, but like I've been saying that small opportunities in the public sector are beginning to emerge, but I don't think banks are something that I'm very keenly interested in for making active positions. I think better opportunities exist in other sectors. Sorry, I'm going through a bit of a dry throat phase. PSU. PSU, let's see. So PSU, like I was saying, PSU has started to show this tiny little positive divergence, which tells me that we might see some Upward momentum in PSU banks. Private banks, not so much. PSU banks, more likely. Some momentum buildup is there. Pharma continues on a very strong momentum. Again, very attractive for maintaining your positions. Making fresh positions, not likely, not right away. Healthcare, strong momentum, looks very likely to continue. Fresh positions at this point, not strongly recommended at all. FMCG, I think, is crawling along a resistance trend line. On the daily time frame, also, it's starting to show a small negative divergence. So again, I am not keen about making fresh positions in that sector. Infra sector, since the last Friday, since the last Friday, I can see they started to register a bit of an up move, but I think it can give us. So infra, okay, mixed bag. Some stocks are giving good opportunities, some are giving not so good opportunities. But there was a positive divergence last market outlook that we had noted, and we can see that the index has again started to register a pretty good rally. This line that we had drawn as the resistance has also been breached. So infra is back in the game for sure. Coming to realty stocks, the index at least, the 100 EMA is acting as support. Since the infra sector is beginning to move, good chance that realty will soon catch up. I'm personally waiting for some counters in the realty sector to start showing rally again. That being said, the underlying momentum of the realty sector still remains quite strong, and the return of momentum is quite expected. Energy sector, I'm not seeing very clear bullish signals in the energy sector. And remember, energy sector is also very cyclical in nature. So recent times we've seen very strong rallies unfold in the energy sector. So going forward, we might expect some slowdown there. So I'm not very keen on the energy sector, no, in the short term outlook. The financial services sector, again, in my opinion, is a bit of a mixed bag. Um, as a sector, I wouldn't really look at this much, but some specific stocks are looking pretty attractive there. CNX Media, again, the momentum has been slowing down quite a bit. I think over here, this phase was strong rally, but until and unless this sectoral index doesn't sustain above 2200, I am not really seeing much opportunity in this sector. Metal sector is still looking very attractive. We noticed this strong positive divergence on the metals index 75-minute time frame last week, and I can see that it has already given quite a sharp rally. I think Nelco was up quite a bit. I think some of the metal sectors have given very, very good rallies, and I think that can definitely continue. So metal is a sector that you want to look out for. Well, consumption continues to look strong. um, Fresh positions, probably not right now. Wait for it to come back to the 20 EMA on the daily time frame before you consider fresh positions there. Service sector continues to also look pretty strong. Auto sector, this is what I wanted to see. I think the auto sector is also looking strong. So we in the Trade Together program have an active position in some major auto players, and they are giving very good returns despite of being mega large cap companies, and we continue to hold those positions into the next month. All right, the IT index. What does the IT index say? Very strong rally unfolding here, and I can see that this rally is expected to also continue. Um, there is a trend line resistance present somewhere here, but the 75 and the daily time frame are both suggesting pretty strong up move is in place and it can be expected to continue for longer. All right. With that, let's also take a quick look at the indices chart. And a lot of you have been asking how I make my intersector index chart. So it's very simple. All you have to do is plot a line chart for Nifty and then use this plus button to add the name of these indices to your screen. That's it. Once you do that, it'll give you a comparison. Now, this what you're seeing at the top is an indicator that I have added. Um, you can choose YM, DW vertical lines. You can just go to indicators, write vertical lines, and you will see it over here, yearly, monthly vertical lines. Or you can also choose time based vertical lines, right? And then you have to change the settings slightly. So here I only show the dailies, and I have selected the starting of the week to Monday, and these are the styles. Basically, I want the labels on the price scales, so all of that is selected, showing it to you on screen so you can take a screenshot and implement per your comfort level. So this is like a very easy chart which gives me a very good view of what the prices have done. So starting last Friday, or let's see from Monday, basically we can see the purple line which represents the realty sector has done very well. In fact, it's been up 3.37% this week itself, right? Closely followed by the pharma and the healthcare, which was what we expected, and the IT sector. So three sectors that we've mentioned are very strong. Now, the realty sector, remember, is highly volatile and it's just coming out of correction. But it looks like, based on the charts that we've just studied, that the realty sector is going to continue upward and stronger, right? Service sector continues to remain strong. Infra sector is back in strength. Finance sector is a mixed bag, but still strong. Auto sector and the metal sector, I think lots of opportunities continue there. CNX PSE is something that we did not glance at. So let's take a look at CNX PSE. What is the PSE sector doing? So the PSE sector is, again, if you see this massive negative divergence followed by this resistance of the RSI to the level of around 70-ish, is giving bearishness. But again, the tendency of the RSI to also not break below the level of 40 is giving bullishness. So I would say it's a clear cut mixed bag, and I would tread very carefully when it comes to PSC stocks. I think they're a little oversaturated at this point. Next, we have the metal sector, which was up around 0.78% this week. Um, PSU Bank, I think in the next few weeks, we might see it come up. FMCG, if the market rally continues, then FMCG and consumers sector overall, or consumption sector overall, are going to lose a little bit of their shine, right? Okay. So, guys, with that, I have come to the end of the discussion that I had for you, and now we'll move on to the Q&A session. So I will first invite our members who joined us on Zoom to ask their queries. In the meanwhile, I'll also open up the stock request form. And for the members who've joined us across different social media platforms, I will request you to please fill in this stock request form if you want me to answer your queries. The stock request form link has been shared in the comments for you to open. You can also go to expinvest.in/stock request to open this form. Right, you need to fill up this form to ask me your queries, because as a SEBI registered analyst, I am required per regulation to maintain a record of all stocks that I publicly discuss. All right. All right. So, first question that we've received from Jaswinder on Zoom is to analyze Cochin shipyard. He says it has declined by almost 30% in 1 month. Do we expect to the decline to continue, or do we expect a bull run in the future? So let's take a look at Cochin shipyard. I'm just reading the layout. Okay. Let's start with a larger time frame of Cochin Shipyard. And what I can see on Cochin Shipyard is, number one, the underlying trend is extremely strong, undoubtedly, right? And I understand that the correction that we are seeing is causing anxiety, but you have to understand that this is a stock which it's I like to categorize it as a super trender. Now, Now, the stock has been in a super bull run, I would say, since about June 22, right? On an absolute terms, it's already gone up 19x, and for good reasons, right? Not only that, this entire bull move has also been backed by pretty strong volumes, as is visible from this MACD tool. Okay. If you look at the RSI also, it has been in a bull range. The daily time frames RSI has been in a strong bull range of 40 to 70 plus since around March 22, right? Coming down to one time frame lower, that is the 75-minute time frame. All right, on the daily time frame itself, let's kind of draw our trajectory. That's I'm going to choose that as my maiden trend line. Since it's a daily, I'm going to turn that to yellow, and that becomes a support. Trend lines are very, very indicative, right? And different people drawing them will lead to different outcomes. That is why they don't become primary decision making tools for us, but they are pretty important, I would say, as um, the marking kind of the path to that the stock is currently following. That's the role that they are more likely to play. Now, next important thing I want to do is draw my support resistance zone. So basis the real high that I can see on 75, I'm going to draw this here. Next real high I'm seeing around this zone, so I'm going to mark that. So the first real high that I marked, I can see that acted as a pretty good accumulation zone. And then the next one also acted as a very good accumulation zone. The next real high is around here. I'm gonna mark that. I'm gonna mark that. So I'm gonna mark this. And again, I can see this also acted as a very good accumulation zone. So I like to call these predictive accumulation zones, right? These real highs. So why do I call them real high and not just high? Real high because this is basically where the momentum, right? This is where the momentum peaked out. And sometimes what you will see is that even after the momentum peaks out, the price continues to head higher. Now, that is because of what you can call inertia. Now, if you think about a train, even after the engine stops, the train can continue to move in a forward direction. Why? That is because it is already in motion. That's a little bit of physics there. So that is also very evident in price. So what you will see is that often price comes back to its real high to kind of get a booster shot before it rallies upward and forward. And this is a very, very repetitive thing that happens in the market. So after a lot of observation and trial and error, I have seen that marking these real highs or these predictive accumulation zones, even though it's a little bit of a time taking activity, has a lot of merits for my analysis. So this is the real high. And then you can, also combine this plotting of the real highs with other rules in the market to get good indications of what might happen or where the price might correct to within a bull trend, where a dip might extend up to. So what I can see is that, like clockwork, every time the stock has established, now this one is, yeah, this one I haven't marked, this I have marked, right? So this real high has been established, and after establishing this high, the price has gone into correction. So far, if you see this correction on an absolute terms, it looks to you like it's fallen 30%. But so far, it has only come down to retest its very previous real high. So I think right now, Cochin Shipyard, where it is standing, actually makes for a very good predictive accumulation zone. This is also the reason why I have given a call to my members to go long on this stock just today, right? Or was it yesterday? But, anyways, that has been done. Now, for somebody who may be a little bit more risk averse here, a good strategy would be to wait for the stock to establish a higher high. Okay. So I can see that this level around 2175 would act as a good potential resistance. And if the price sustains above that, now remember that is also 15% away from the current market price. Okay. So if you're willing to take that compromise, you can wait for a higher high and then participate in the next leg of rally, right? Or you can create a position and you can set a stop loss and continue to hold on to the stock. So I think this stock underlying momentum is very strong. The price structure is pretty secure. Sure, on an absolute basis, the stock is taking a bit of a correction, but like I always say, whenever you're assessing a stock, always look at it against the context of the broad trend. Look at it against the context of the price structure, the stock personality, the overall market, everything. This is a very bullish stock, and I don't think there is anything to worry about. This is not, however, a very suitable stock for very short term trading because of its extremely volatile nature. Right, so we'll move on to the next one. Let's take a look at Siemens, another very strong moving stock but also a very volatile stock, right? So we'll repeat the same exercise. So on Siemens, or Siemens as it's called, let's draw some trajectories. So since this is the first line I've drawn, I'll set this to a thickness of 2, and I'll just clone that same line to identify what trajectory the stock is following, and clearly very, very strong uptrend. Currently giving a bit of a correction with very strong warning. Big negative divergence was forged on the daily time frame, um, which is also a tendency of the stock. I can see last time also it kind of tested the real high. So this was the real high, right, of the daily time frame. What it has done is, the price has come back to test the real high, but the RSI is indicated clearly that it's a negative divergence formation, and then some correction was experienced. Now, right before that, the real high was here, and as you can see that the price came very close to that real high, not exactly. It just took support at the intermittent support level, or the EMA kind of came in the way. This is very common when the underlying trend is super strong. Again, on an absolute basis, this itself was a 15% correction. Now what we are seeing is that again a real high has been established, or had been established over here, and a negative divergence was forged. Now, currently, the stock is clearly undergoing some correction. Next question is, where do we expect the support? So this, if we take as the support, is a little bit too far away. But on the RSI itself, I can see that the price has registered one high here, and maybe I will also mark this one simply because of the price distance, right? So a potential level up to which the stock can take support. All right, the even the 75-minute time frames real highs coincide with the daily, so I will not double mark them. So basically, this entire zone becomes my potential support for Simons, and until and unless it doesn't establish a strong rally, may not want to take immediate. I may not want to take immediate position. However, one thing I just noticed again is that here there was a gap, right? And usually what I have seen that when a strong moving stock like this experiences a gap formation, when a strong moving stock like this experiences a gap formation, it tends to act as support. So this might act as support. Plus the 75-minute time frame has shown a very clear cut positive divergence. Why would I call this a positive divergence? Because here the RSI established a low at this point, and since then the RSI established a higher low, but the price has established a lower low. Okay, that's why it's a positive divergence on the price, and since then the price has also established a higher high and come back to retest the support, which is the gap. So this does make a pretty good setup, I would say. A stop loss that I would maintain would be this low of 6,560, and the target that I would set would be this trend line resistance. Why would the trend line resistance and not the price high? Because I think the price is following this trajectory, this path really, really well. And I can see that time and again, the trend lines that we've drawn have acted as very strong support resistance zones. So that is why in the next leg of up move, I would expect that. Now the risk reward ratio is above 3. The risk per unit the returns per unit of risk that we'll have to take exceeds 3. So this becomes a pretty good setup. Yeah, I did. I don't know why that happened, but thanks for letting me know. Um, yeah, I think my audio device switched for some reason because of which I went on mute, but I am off mute now. So let's continue. So looking at para cables again. If you missed some part of my discussion, don't worry. This video will anyways be uploaded on my YouTube channel. You can catch it there. Yeah, so I can see that para cables that we have here is a really small stock. It's a micro cap just coming into the region of small caps. So liquidity is to be expected. Expected liquidity is pretty low. However, the trajectory is quite strong, right? So since this is weekly time frame, I've changed the trend line colors to white. Okay, so now basis the trajectory, this looks like a resistance zone. So until and unless we don't have like super strong indications, we will proceed very, very cautiously. Coming down to the lower time frame, this did act as a very strong support. Trend line wise, also 250 EMA support as well. daily time frame, RSI is also maintaining very strong RSI positive range. It's so the RSI of the daily time frame is maintaining a very strong positive range, and the volume on the uptick is also pretty strong. So there is no harm in saying that we expect the uptrend to continue, and I would expect at least this price high to get tested. Correct. Now, since this is a very small stock, short term trading is not something I would recommend you to go for in this, because your risk would be pretty high. Minimum stop loss that I can recommend to you right now would be around 11%, and the target would be around 33%. At the least, it can also be up to 50%. The price structure looks pretty secure to me. The indications are also pretty good on paracables. All right. Let's see. We have some members who have submitted their request using the stock request form. So the first person to have submitted the request today is Bhargav. And Bhargav wants the analysis of ONGC. Bhargav has joined us on YouTube. So you're looking for the analysis and target for around 6 to 12 months. So let's quickly look at the volumes, then we can let the volumes go. So the volume is been strong on the uptrend. Fine, good. Volume is not a concern. So we'll hide the volume, and I can see the RSI has been in a strong positive range on the daily, which is again good. Weekly is very strong. Even the volume growth is very strong. The momentum is also very, very strong. So chalo, let's draw our trajectory on the daily time frame. All right. So this is the internal trend line or the internal resistance zone which the stock was respecting. I have looked at these 2 points and I've drawn that, and here it is again, right? So it seems to be heading higher and heading to a resistance, but it has quite a bit of an ups headspace, I'd say, which is good, right? Let's also internally draw one here just to respect this one, and I will mark this in orange because I want to know that I just want to have that inside key. I created this internal when I was on my 75-minute time frame. So this color scheming and all that I do, right? This it just helps me get better legibility out of my charts when I come back to them after a week or so, because my memory doesn't serve me well. So I need my system to serve me well, right? So what I can see is that 75-minute shows negative divergence, price takes dip, continues to rally. 75-minute time frame right now is showing a bit of a loss of momentum. So I instead of immediately thinking, and also the stock is above this blue line. This blue line is the 20 EMA of the daily time frame. I'm usually not comfortable buying stocks when they're above the 20 EMA because of basically mean reversion. I find a lot of comfort buying stocks between the 100 and the 250 EMA of the daily time frame. Basically, when they are going through the dip in a strong bull trend, right? So I would like to wait for ONGC to come down maybe 10-12%. The reason why I believe that is a possibility, because the 75-minute time frame currently showing a negative divergence, but that is a very short term outlook. From a slightly longer outlook that Bhargav has requested, around 6 to 12 months, I think the stock's trajectory looks pretty strong and it can head for the target of around 430 from current levels of 330, right? So this is where we are analyzing, and I think it can go up to basically this trend line, right? So what I'm basically, where I'm drawing my green line is wherever the trend line currently stands from the, so this gives me from the today's LTP, this gives me a bit of a conservative target level to achieve for, right? And like I said, for with respect to the stop loss, um, so using also the real high trajectory, so this was a real high basis the 75, but this is not the only peak. We can see the price has experienced strong momentum multiple times after this point, but this was, I would say, the last one. So even this real high establishes the level of around 13% lower as a potential entry zone for us, right? Now, for somebody who may be having an active position in ONGC, what should you do immediately? From a short term perspective, a 13% downside can be pretty massive downside for you. There is a negative divergence on the 15-minute, 75-minute time frame, but should you immediately book your profits out? I would say don't book your profits out. And since if you've been holding your position, you have for some reason already endured a bit of a loss and seen that recover. But I don't think you should take more risk than necessary for a on a short term position, on a very short term position. I would suggest use a stop loss of around 324 and a target of around 341. But from a 6 to 12-month perspective, use a target of around 435 and a stop loss of around 278 and continue to hold the position, right? All right, so for uh, David, so we've discussed Bhargav's ONGC. All right, next we will look at a request from David on KTK Bank. Is it okay to still enter the stock? So okay, David has joined us on Instagram and we'll take a look at KTK Bank, and I can see that again the underlying trend is quite bullish. What is the volume suggesting? The volume is suggesting bit of a die down, but there is still pickup on the upsides, which is good. The RSI is in a strong positive range, right? And right now the stock is undergoing consolidation. Okay. Um, Here there was a positive divergence, and since then the stock has moved up by just around 7%, which is almost nothing for this stock. So let's draw my trend line trajectory to visualize the path the stock is on. I want to do that using the peaks because in this stock it feels like the peaks are better established than the bottoms. All right, that seems about right. So the stock has taken resistance, come back, taking support of the 250 EMA. Why is that significant? Because last time also the stock took pretty strong support in the 250 EMA. The underlying momentum is very, very strong. So given that the stock is already halfway down the trajectory, is good potential support. 75 has shown a positive divergence. So let's also give visibility to the real highs of the price. So I think I will mark these 2 points. So acted as very good entry level here. Since then, the price also established a real high here and here. Okay. So I think the stock, in my opinion, is on an upward trajectory. And I think the level of this one, 211, would act as a very good support level. So let's go back to the comment or the question. Is it okay to enter the stock and buy for long term? So yes, you are exactly asking the question that I want to answer. The stock is attractive for long term. I won't suggest doing a very short term trading in the stock. So I think it is coming out of a consolidation and it has upward bias for sure. Karnataka Bank looks good for long term. I would suggest a stop loss of 211. Considering the underlying momentum is strong per the daily time frame, the weekly time frame, the volume built up is good, the trend line trajectory is bullish. I would also set out a target of around 385 on this stock. All right. Now I can see some members on Zoom have asked questions. So Jaswinder is asking for the analysis of Natco Pharma. What is a good entry point and is it a good swing trading candidate? Let's take a look at Natco Pharma. Before I answer Natco Pharma, just a little bit of intel for our viewers that if you also want to join the Zoom interaction from next time onwards, here's how you can do it. Just hop over to my Telegram channel. Now, on my Telegram channel, every session is posted, every session's registration link is posted. So you can join, you can visit this registration link and you can join the Zoom event if you want definite response to your queries during the session. Or you can take a chance by filling the stock request form, up to you. How do you join the Telegram channel? You open Telegram and you search Trade with Kavita, or you click the link which I have shared in the comment box for you, right? t.me/trade with Kavita. Contrary, if you have Telegram app downloaded already, search Trade with Kavita and join my channel. Now, mind you, you will come across some fake channels with slight name variations. Beware of the fake channels, even if they have more number of followers, because these fakesters like to rotate the name of, you know, um, content creators or people who are garnering some sort of attention, and they try to jump in on the bandwagon. But avoid those fakesters because they'll anyways talk to you about futures options and they will try to scam you out of your money. This is the correct channel. Go and look at the messages. The messages will either be posted by my support team or they will have my own signature. You will see posts about my webinar, my analyst comment, and links to my official business website, that is EXP Invest. That is how you will know it is the correct channel. So please be careful. Now, I know Telegram is not a very, very business safe way, but it's a small business friendly platform. And I have explored launching my own app, but as a non techie person, it comes at great cost and great time and brain involvement. I would rather work on building my new trade tracker for my members, which is also a pretty huge task. So, that is a new offering that I'm coming up with for all the members of the Trade Together program. This new trade tracker, by the way, will allow you to track all your equity related investments, including mutual funds, in just one tracker. I'll be creating training videos around them, and this tracker will be available to members of the Trade Together program, elite and above plans. All right, coming to Natco Pharma. Let's remove the existing drawings and take a fresh look. I haven't analyzed the stock in a long time. I can see the volume is quite good in this stock. The upside is being received well and is being participated in pretty well. Even the underlying trend here is very, very good. So let's see if this is a trajectory that I want to catch, or do I want my trajectory to look a little steeper? This versus this. I think, sorry about that. I think this feels like a probably a slightly more reliable trajectory to me, the one that I drew on the basis of the highs. Simple reason being that the highs seem more better established. With respect to the lows, I think a lot of times sentimentality can come into play. So if it's possible for me to establish my trajectory using the high points, I will do that. Now, coming one time frame lower to daily, I can see that the stock established a real high at this level. here before it went into correction. Fine, that's just good to know. Before this point, the real high was established. Before this point, the real high was established, I would say here. So let's take that and mark it. Okay. And then we can extend it. So I can see again that this level has acted as a very good predictive accumulation zone multiple times, right? And now this high has also been breached, but the price has also come out and established newer highs. The latest one being around, I would say, this level, right? Very close to the previous level. So right now, stock is undergoing very strong momentum. So I think even though the participation and everything is good, I wouldn't recommend making a fresh entry right here, right? Because first of all, see, from a long-term perspective, this stock continues to remain very attractive. It hasn't established a real high yet, so I will refrain from marking just now. But I think you should wait for it to come back to the previous real high before making a fresh entry. So that could be around a 20-25% correction. But this is a stock which I think looks very attractive for long term perspective more than short term perspective. From short term perspective, I think it's too noisy, and I would not prefer to do swing trading in this stock, right? So I hope that answers your question. Medium term investment, also you're asking 3 to 6 month objective. So if you're looking for making a fresh entry for 3 to 6 months, which you are, as you're asking about a good entry point, right now is not a good entry point. I would suggest you wait for the stock to come down to maybe um, below 1200 levels before you assess this. All right. So Satvik is asking for the analysis of IndusInd Bank, and let's take a look at IndusInd Bank. Let's remove the dated drawings and get a fresh perspective. So strong trend here. Here I feel like I want to use the bottoms to draw because they just fall in line really, really well. And I can see that the trajectory is upward, but the momentum is a little tired, or rather not that well caught up, right? It's not that well caught up. um, but the price has come down to, oh look, the price is the price and RSI have started showing positive divergence, so it's starting to look attractive. And the daily time frames, RSI is also in a bull range or a positive range, which means it's going, when it goes up it goes above 70, when it comes down it's respecting the level of 40, and now it's already established a higher high on the RSI, which means the momentum is already pretty strong even though the price has not established a higher high. This is like a very, very subtle observation which I want you to pay a little extra attention to. So you see, price has not established a higher high, but RSI has established a higher high compared to the previous peak, right? So this shows that the momentum in this bit of upside has been quite strong, definitely stronger than it was. So the momentum here is stronger than what it was here, right? So this strong momentum is what we want to write as momentum trader. So I think IndusInd Bank is looking very, very attractive, right? And I think the immediate stop loss would be this immediate price low. If the price establishes another lower low, you want to get out. Also coincides with the 500 EMA support. So 1328 is, I think, what I would say. And the underlying trajectory is quite strong in this stock, even the 75-minute has gone into a very strong, sorry, the 15-minute has also gone into a very strong, I would say, range shift, right? I would expect the upside to continue in this stock, and the first target would be this trend line, since this trend line has acted as support in the recent rally that we are seeing. So until and unless this trend line doesn't get breached, we can't really um, get ahead of ourselves and expect a stronger rally. So this is the target around 865. So stop loss is 1328 and target is around 1865 from the CMP of around 1425. So that's a 7% versus a 30%. So I think that meets a risk reward ratio criteria. But since the absolute risk is slightly on the longer, on the higher side, I would choose an accumulation strategy to build my position between the current market price and the stop loss level, right? And also the overall allocation, I wouldn't expose more than 4% of my total capital to this stock, 4% of my total swing trading capital to this stock, right? All right. Um, Thank you so much, Sayan. Okay, so perfect. So, with that, we come to the end of today's session. I think on the next session that we have on Wednesday, the Let's Get Technical series, I want to talk to you about allocation, because this is a point that a lot of people overlook. So, we've done one session on allocation previously, and I got very good feedback on that session. So, we'll do another one, and this time I will structure the session in a bit more details, and let's get into that talk again about why allocation is so important. And also internally, for all the Trade Together program members, I made a small change in the next version of the tracker, that I used to initially give you a range of allocation, but now I've changed the system. I'm going to give you an exact percentage of allocation. It just makes my life easier, and I think for a lot of people who join me new and don't really have that decision making acumen yet, for them it's just a lot more clearer how to work with, it's better for them to work with an exact allocation percentage than a range percentage. So I want to walk you through the broad framework that I use for making capital allocation. Along with that broad framework, I also want to tell you few caveats, a few conditions which I like to apply to adjust my allocation to make sure that the risk exposure of my capital is very little, right? So we'll talk about that on Wednesday at 5 p.m. So just one reminder that if you found this session useful and if you found what I've shared with you meaningful, make sure to like this video, leave a comment, subscribe to my YouTube channel, and if you want to join me in the next Wednesday session, then make sure you join my Telegram channel. And when the link for that event's registration is posted, you sign up using that link. Thank you so much for joining in and asking me your questions. I will see you on Wednesday at 5 p.m. again. Until then, namaste.